It's a pivotal moment for Bitcoin. In this analysis, we're going to look at factors to determine if Bitcoin is going to push higher or range for longer. Hey guys, it's Keith Allen. Looks like the stream is a little bumpy getting on today. Glad to be here and glad to be back. Doing good. Follow up with doctors. Went good yesterday and feeling better every day and feeling stronger every day. I appreciate all the well wishes, everybody. So let's just climb right in and see what's going on here. As we can see, Bitcoin pulling back a little bit off of the recent Trump pump, if you will, and now things settling in just a little bit. So what exactly is happening here? For that, we're going to take a look at the charts and try and clarify what you're seeing here. We had an attempt at reclaiming the 21-week moving average. That attempt so far has failed on this candle, but I'm not necessarily in a rush for this. That's okay. It'd be nice for this to happen, by the weekly close. But again, this is not a hurry up offense, in my opinion. It's taken over 2.5 years for this cup and handle structure to develop, and it makes sense that this handle is going to take a little bit longer to develop as well. So whatever the case may be, let's look at what the technicals are. And it's clear that we have immediate overhead resistance here. Pretty strong at this 21-week moving average, which currently sits somewhere around that 65, 300, 400 zone. And support is happening here. It's breaking down as we speak here. Okay. So when I wrote this analysis a little while ago, we had 2 retests on this, or 3 retests, I should say, on this 50-day moving average, and we've just broken through it again. So this lends itself to a potentially more of a breakdown with some backstops potentially down here between the 21-day and the 200-day moving average. What we don't want to see is a death cross here, right? Staying up above this level, I'm totally good with that. If these two death cross, then we have a different set of circumstances that we're going to have to discuss. So, how long is this going to take? That's anybody's guess, but we've got some, a few factors that we need to consider here, and we're going to try and cover those in this analysis. So the first thing is, this 21-week moving average obviously is pretty significant, and I'll show you why it's so important to me. I'm going to take out the other moving averages here for a sec, so we can just focus squarely on the 21. That's the green line here. As you'll notice, every time we interact with that level, if we lose it, whatever the directional move is, that momentum tends to carry a bit, right? It carried down here after we lost it. When we reclaimed it, we had a nice pump back here from the bottom of the market here, which is at the moment our macro bottom at 15.5. As soon as we broke it, things started to build higher. We lost it briefly, but reclaimed it very, very quickly here. You saw things, spike up, another loss, a consolidation period, and with any luck, that's what we're dealing with now. With any luck, this turns into another consolidation period. And if it happens in this red zone, that would make a lot of sense because we have lots of confluence in this red zone from the prior bull market. If we go back in history, again, you're going to see every time we interact with that green 21-week moving average, the momentum tends to carry. And it's not always an easy thing to break in either direction, okay? Especially to the upside. So when we get those breaks to the upside, they tend to be, in many cases, and this actually, I think this would have in this instance probably carried through, but this was the COVID crash right here. Nobody could have forecasted that. And so that's why we had a breakdown here. But I think without this, which I consider kind of an anomaly, without this COVID crash breakdown, that this one probably would have continued. And of course, this trajectory continued shortly after. Again, we'll go back in history and see all the times that has come into play, and you get the idea. But like I said, best case scenario is if we struggle here for a little while, this ends up being a consolidation range somewhere up in here. And as long as we do not death cross on the dailies, I'm going to be okay with that. Totally okay with that. I view this as a dip buying opportunity. A lot of the market not really in tune to that just yet. So, hey, I could be wrong. I could be right. You have to figure out what you think looks right for you. Oh, I see. We've got some people chiming in here. Let's see what's going on before we can do this. Is today's unemployment news good for markets? Good question, Arpit. Well, he's speaking of today's unemployment report, and initial jobless claims came in hotter than expected, hotter than the previous. And so in terms of a rate cut, yes, it is good for rate cuts because it supports the narrative that and the data that points to a slight uptick in unemployment. I think we went up to 4.1% here recently. And it supports the narrative that the market is baking in rate cuts for September. So we got that going for us. Can we fill the CME gap? Santos, real good chance that could happen. Absolutely. And Switch Whisperer, thanks for joining us. And yes, dip buying opportunities. We all agree there. So that's good. Glad to see us on the same page. Hey, by the way, yesterday somebody commented about putting closed captioning on these videos, and yes, absolutely, I do that. The way that we're doing these, the way it's working right now, because I'm going through a third-party streamer, is once they publish to YouTube at the end of the stream is when the captions start to populate. So it takes a little bit of time, but they do end up there. So if you're missing it on the live, you could come back and see it. You can, of course, also on the YouTube version, there's a written analysis that you can cut and paste into your translator if you want to do that. And those written analysis will appear on the X version, by the way, of this video. And on that note, just a bit of housekeeping. If you like these, do me a favor, smash the like buttons, tick the little bell up there. I think it's up there, wherever it is. And make sure you don't miss any of these live streams. If you subscribe, you're going to get notified every time that I'm doing this. So be sure and do that so you don't miss any of the content, right? So let's go back to the charts here. We've been talking about what's happening here around the key moving averages, right? So we did have a death cross on the 50 and 100 back, I guess, last week. And we see how that is playing out here with more downside, more downside momentum here. Teetering here on this 50-day test, retest, and right now we're seeing some softness here. So what's this look like in terms of potential? Well, let's see what it looks like in terms of liquidity, like what's going on here. As you can see, we had a nice block, a bid liquidity down here at this 63.5 level, and I think it actually might have rug pulled. Well, some of it got filled here for sure. You can see that there was definitely a fill here. A partial fill anyways, but then it looks like some got rugged and more got rugged lower even. Well, not rugged, that was just moved down. So we're seeing some softness here, which could potentially get us down there. Where is that CME gap, by the way? Let's go look over here and see where that CME gap is and see if that's something that is going to be potentially filled here. I got my MTF up in there, which makes it hard to see the gap. Let me turn that off so you can see where the gap is. Okay, so we do have a gap down here in that 60, 59, 60 range. So yeah, potentially that could get filled. Let's go back and take a look at that liquidity and see what's happening here a little bit lower here in this time frame. So you can see lots of space here if we should happen to go down below that 60K range. For the moment, support around 61 to 61.5. But, when you start seeing it move around here, that's when I have less confidence in it actually holding. The good news is here, we see some buying has resumed here from most of the order classes. So we'll just have to see how this continues to develop through the course of the day. I noticed at one point, a ladder had been pulled from here, and you can see it's now reappeared. At least part of it has reappeared here in this 67 to 69K range. Speaking of 69K, if we are able to, maintain this and keep grinding our way up, I think that's an area that we're going to revisit and potentially spend some time at. That was the 2021 top. And so, even though there's not a ton of liquidity stacked there at the moment, I think this is a very important level because we spent so much time here, and it was resistance for literally, years. So, from the entire top here. That was the top for over 2 years. So it's reasonable to think that if we can reclaim this 21-week moving average, that we are going to run into some technical resistance up there at that 69K level, and of course 70K is where the bid liquidity really starts stacking much higher. Let's zoom out a little bit to get some perspective on that. You can see one of these ladders here, or one of these blocks, has actually converted into a ladder, shifting down a little bit. So I'm expecting this stuff to change a lot here in the coming weeks. Why? Well, we have Mt. Gox coins coming into the fray. And so, it's reasonable to think that as more of those coins come into the fray, that's going to add some friction here. I don't think it's going to be a brick wall that can't be passed. I think we're going to see ladders extending up higher, as a matter of fact, as price, attempts to grind up. In fact, if we look over on FireCharts 1, I can give you a view that shows we've already starting to see some liquidity moving in to the above 80K, really extending all the way up to 100K. And to do that, we're going to go to the 3-year chart here. Now, by the way, one of the big differences between FireCharts 1 and FireCharts 2 is the order book history. We only get a rolling 24 hours snapshot on FireCharts 1, whereas we get 3-year snapshot on FireCharts 2. But what we can do with this snapshot, because it's binned differently than the daily view, is we can zoom in on it and we can see where liquidity is. We can see more depth of the order book, simply put. And here we can see that we have bids extending down to, not a lot, but down to the 30K range. And we have asks extending up to the 100K range. All right. So the fact that we're starting to see that movement in that direction is an indication that sentiment is starting to drift up that way as well. So, you think about these guys that are distributing Mt. Gox coins, it's in their best interest. Is it in their best interest to just dump the market? No, absolutely not. It's in their best interest to, sure, take some profit off the table because they're well into profit at this point, but it's in their best interest to ladder up and let the market do its thing. That's my opinion of it. You may have a different one. Santos is saying 62K. That could be the next stop here. Again, we see some liquidity kind of thin, right? The bids that were at 62K have actually moved down a little bit. So I've got a little less confidence in 62K right now than I might have had even an hour ago. And that's the beauty of being able to identify these movements in near real time here in FireCharts 2.0. We can see this moving down, and we can see this door opening here. So there is some softness, despite the buying that we're seeing right here. This may be a little rally, indeed, but I think there's a chance that things could continue to break down further. So we talk about, going to the upside, then sure. Like I said, I do expect that we have some friction here at 69. 70K is where we start seeing the the ask liquidity start to stack. So we're going to have to grind through this stuff. Once we do, though, that's when we get into price discovery mode. That's when we look at how far this measured move on this cup and handle could bring us. And that's a pretty significant move. I showed it to you yesterday. I'll show it to anybody who hasn't seen it yet. But basically what we do here on a log chart is we take it from the rim of the cup down to the depth of the cup. That's 77%. And then we measure a 77% move to the upside from here. And that gets us somewhere in this range of, right in the pocket there, 122, 125-ish. That's the range on a potential measured move. Should this handle play out and we get a breakout, somewhere around here. So the flexibility on that range is like, are we starting from the rim that I have marked at the 2021 top, or are we going to put it at the actual current all-time high? Maybe it even goes as high as 130 K. All possible, not guaranteed, but those are potential targets to the upside if this cup and handle plays out in a textbook fashion. Lots of time for that to develop, though, right? This is not something that's going to happen by the end of the month. At least it's not likely to. This could take literally the rest of the bull run to fully develop, right? Well, this could go out for months and months and months, even into 2025 potentially. So be mindful of that. In terms of what we could see in the downside, the near-term bearish case, in this instance, because all of the fundamental and technical reasons that I got a long-term bullish view of the market, I view that rejection of the 21-week moving averages as really more of a, hey, not now, we're not ready yet, as opposed to it's over, it's done, it ain't happening. I really think that this is going to just take some time to develop. So as long as we avoid that death cross between the 21-day and the 200-day moving averages, and we avoid a weekly RSI dip below that ever important 42 level on the weekly RSI, then I think that we're going to be safe and things remain intact. So, the next question, of course, on everybody's mind, I can't believe I'm going to say this, it's when moon. And obviously a lot of forces at work here, aside from just liquidity and volume. Some things we have to be in tune to. Obviously, the Mount Gox distributions are going to increase in the coming days and weeks, and that's not going to make the all-time high impenetrable, but it's likely going to increase the time it takes to absorb all of that liquidity. Now, if Bitcoin ETF flows are any indication of sentiment and demand, we might be positioned pretty well for this, because as you can see, even despite the fact that Grayscale has had some selling yesterday, we're still net positive for 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive trading days, and that covers a range of prices here, sub 60K and above 60K. So now that we're dropping back below, or potentially dropping back below 60K, or even in the low 60K range, I expect the appetite to continue. Now, we have the ETH ETF scheduled to hit the market in a few days. Tuesday, I believe, is when it's scheduled to hit the market. So with that happening, potentially we could see some money rotating from Bitcoin, from the Bitcoin side into the ETH side. So maybe some rebalancing happening from those on the TradeFi side who want to increase their crypto-related exposure. So, maybe that's happening between now and the end of the month, or most certainly by the first of the month, when we typically see a lot of rebalancing happen. So I'll be looking closely at how that develops. Kind of unclear of whether Grayscale's ETH ETF conversions are going to be similar to the Grayscale Bitcoin Trust that converted, because remember, number one, those people were holding for over a decade, locked out of their coins for a long time after the FTX crash, or locked out of their holdings, I should say, after the FTX crash. And then, they had that fee structure that forced a bunch of people to exit the market quickly. So that kind of led to a dump, that led to a dump of Bitcoin spot price until the market found its footing and things reclaimed. Whatever the effect is here, there is a conversion happening from ETH. I don't know what their fee structure is, so I don't know if that's going to be a catalyst or not. We're just going to have to wait and see, and we're going to find out soon. Whatever the case is, though, I think that the volatility from that is going to normalize, just like it did from the Bitcoin ETF rollout. And I think the volatility from the so-called Trump pump is going to normalize, just like things tend to do in this market. And we'll get back in to whatever the macro trend is at least until the next catalyst appears. So what do we have on the horizon? Well, obviously this political race is heating up, and I'm seeing some speculation today as to whether, hey, what's going to happen if Biden bows out of the race. Is that going to is that going to take the wind out of the? Is that going to take the momentum out of the Trump pump? Might create a completely different set of circumstances. Who knows? We just we have to see how those things develop. But I do think that those are short term developments, kind of buy the rumor, sell the news type of events, and that after the dust settles, the market will normalize and the macro trend will continue. So politics certainly part of it. Inflation coming down is a good thing for the markets. We have at this point a really high sentiment that we could see a rate cut in September. And we also have FTX settlements coming up. There's a hearing on that in August. One of the things we're trying to determine is whether those are going to be distributed in U.S. dollars, which it's my understanding U.S. bankruptcy law dictates that those holdings are distributed in U.S. dollars, and it would be distributed in the dollar value that was lost at the time of the incident, as opposed to, and I think they're actually offering 118%, which means they've tacked 18% on 18% interest on to whatever people have been locked out of here since the FTX crash. So one of the things that they're debating here in the hearing coming up next month is whether some of those payouts could potentially come in the digital assets that were seized. So that would change things a lot, right? Because if they're giving back Bitcoin, that Bitcoin could potentially either get locked in wallets, cold wallets, or it could make its way back onto exchanges and get distributed. If they're distributing cash, well, that, my friends, is liquidity to help absorb anything that could be getting sold and help push the market up forward. So a lot of eyes will be watching that FTX case to see what they determine when after the hearing, which I believe is scheduled for August 6th. And then I believe there's votes due about 10 days after that. So somewhere around mid-August, we should have some clarity on that. Whatever the case, as this all kind of continues to develop, and like I said, with rate cuts potentially happening in Q3, I think that means that it's really likely that we could spend an extended time in this range before we see a breakout to price discovery and a six-figure all-time high. That's my take on it. You may have a different one. Looks like we got another comment in here from Alexander. Have you listened if UK governments are going to sell BTC like German governments? I have no idea. And again, I think it's a blip on the radar, especially as we're seeing markets being willing to absorb. The TradFi markets have been willing to absorb at these prices. So I'm not really concerned if that happens or not. I think it's kind of crazy that these guys are unloading at these prices, knowing that there's really potential for a considerable amount of upside. But hey, that's up to them to do what they want with their coins. Again, at the moment, I just want to take another look here at what's happening in the order book. As you can see on FireCharts, strong resistance here, sub 64K, trying to push price down and potentially down into the low 60s, possibly even head towards this CME gap before it's all said and done. Nonetheless, not overly concerned. I see these as opportunities. You view them as you wish. People keep asking me, hey, would you short this? I would not short this with your money, but that's me. I'm super conservative. I'm macro long. I'm net long in this situation because I think that what we're seeing right now, or at least what we've seen here in the past few days, is more than your average short squeeze. I think that this is the handle developing and potentially could lead us to an eventual breakout here. One of the things we're watching here, in addition to, hey, we want to avoid that death cross, could we conceivably print a lower low? And that gets us way back down here into the low 50 range. So that's something to watch as well. At the moment, I think we're in good shape. I think that the market is just doing what it wants, what it normally does. And if some weak hands get shaken out in the process, look for those opportunities to, well, how should I say, stack them. All right, guys, going to leave it right there. I appreciate the support again. If you like these streams, do me a favor, smash all the buttons, hit the subscribe button, especially so you never miss an episode. And by all means, keep those comments coming. I absolutely love them, and I engage with each and every one of them. Have a great day. And as always, trade safe, my friends.